have a vision for your life. Get really clear on what it is you want your life to look like, and then build a business to support and enhance that vision and that lifestyle. And if I'm being honest, man, in 2017, beginning of 2018, I kind of got sucked into the vortex that social media can be. And, scale is a very popular, sexy word. And I said, man, if they can do it, I can do it. And I set out to scale my wholesaling operation, and I succeeded. But what I failed to realize was that my overhead ballooned from 4 or 5 grand a month to 45,000 a month. I had different types of headache and stress that I didn't have before, and my margins were shrinking. And that wasn't the business that I set out to do. I've always wanted a very simple business that was low overhead, high margin, right? And I had built the opposite.
Welcome to Racking Up Rentals, a show about how regular people, those of us without huge war chests of capital or insider connections, can build lasting wealth acquiring a portfolio of buy and hold real estate. But we don't just go mainstream looking at what's on the market and asking banks for loans, nor are we posting "we buy houses" signs or just looking for, quote, motivated sellers to make lowball offers to. You see, we are people-oriented deal makers. We sit down directly with sellers to work out win-win deals without agents or any other obstacles, and buy properties nobody else even knows are for sale. I'm Jeff from The Thoughtful Real Estate Entrepreneur. If you're the kind of real estate investor who wants long-term wealth, not get-rich-quick gimmicks or pictures of yourself holding fat checks on social media, this show is for you. Join me and quietly become the wealthiest person on your block. Now let's go rack up a rental portfolio.
Thank you for joining me for another episode of Racking Up Rentals. Show notes for this episode can be found at www.thoughtfulre.com/E59. Please do us a big favor and do yourself a big favor at the same time by just hitting that subscribe button in the podcast app. It will definitely help you make sure you don't miss any upcoming episodes, and also sends a message back to the platforms that lets them know that you like the show and that they should let others like you and I know about this podcast. Onward with today's episode. In today's episode, I'm really pleased to share with you an interview with Alex Pardo. Alex is a very experienced real estate investor of his own. He is the host of the Flip Empire podcast, which is where you might know him from already. And he is also a co-founder and co-host of a great mastermind and coaching program called Ascend. And in this conversation, Alex and I talked about a lot of different things, but what we found that emerged as the theme for this conversation was intentionality. And I didn't know that that was going to be the case going in, but that's really the idea that emerged, and definitely connected the two of us, and we just had such a good sort of bond over that. And as you can tell from the clip that I shared with you at the very beginning, intentionality is such an important part of what we are doing as real estate entrepreneurs, as entrepreneurs in general, and as people. So I think you're going to get a ton out of this interview. Alex is a great guy, fun to talk to, and I think you're going to like it very much. So I will stop blabbing away, and I'm going to give you right now the interview with Alex Pardo. All right, Alex, thank you for joining me today.
Hey, Jeff, it's my absolute pleasure. I'm excited to be on your show, my friend.
I've been looking forward to this for a while, so I'm grateful that we got a chance to meet a few months ago, and just been great getting to know you. So I'm a big picture guy. I would love for you to just start at the high level. Start with the 60,000 foot version of Alex, and then give us some more detail.
Yeah, absolutely. And feel free to cut me off or jump in whenever you want. But, come from pretty humble beginnings. My family, my entire family is from Cuba. My sister and I were born here in Miami. I don't have a rags to riches story. But I also did, I grew up in a middle-class family. I don't come from a family of entrepreneurs or anything like that. In fact, I'm the very first entrepreneur in our family. But I think one of the things that motivated me very early on was the fact that I saw how hard my parents worked for somebody else, working 12, 13-hour days. And early on, I just realized that that's not the kind of life I wanted. While they taught me a lot of work ethic and pride of ownership, pride in their work and all that kind of stuff, I took a lot of that, but I also took the fact that working for somebody probably wasn't going to get me to where I ultimately wanted to go. And I realized that at an early age. And I remember being 11, 12, 13 years old. I grew up playing sports. And so I'd be at the ballpark every weekend, and I would buy baseball cards and I would flip them for an extra 50 cents or for an extra dollar. And that's when I kind of got my first taste of buying something low, selling it a little bit higher. And I'm like, I kind of like this thing of course, at the time, I didn't know it was flipping. I didn't know it was wholesaling, or I was just making a little bit of money so I can buy a pizza or something, right? and then it's kind of weird, man. I had a shift when I got into college. I've always been very ambitious, and I don't know if it was the perceived prestige of being the CEO or the CFO that kind of was appealing to me. But sometime in college, my senior year, I decided that I wanted to go be a bigwig at a big corporation. Of course, not knowing what that meant, not knowing what corporate America was all about, I started interviewing with companies like General Motors, Johnson and Johnson, General Electric, and ended up getting accepted into GE's financial management program. So without getting into too much detail there, 3 months into that job, working 70 to 80 hours a week, I'm like, it reconfirmed the fact that I don't want to work for somebody else.
Yeah.
So I finished that 2-year program, moved back to Miami. Here I am, 25 years old, moving back into my parents' house, not how I had kind of drawn things up in my head. So that was motivating for me as a single guy to, 25 years old, living back with my parents was probably not the best look. And man, I had started reading books like Rich Dad Poor Dad. I bought a Carlton Sheets course, No Money Down, so I thought real estate was all about assuming loans. And I was traveling, backpacking around Europe, trying to kind of find out what I wanted to do with life, right? Trying to figure out what I wanted to do when I became a grown-up. And a buddy of mine sent me an email and he said, "Hey, Alex, I'm going to this Marketing for Deals boot camp in Atlanta. It's $997. Do you want to come with me?" And it was a kind of fork in the road defining moment for me, where I almost remember not going because I had financed that entire trip on my credit card. I didn't have much money, but I also knew I had to do something. I was going to be coming back down to Miami in a few weeks. The trip was over and like life was going to start. Like reality was setting in. And I'm like, you want to know what? I've always been interested in real estate. Let me just bet on myself. And that's exactly what I did. I went to that event. I pulled out a pre-foreclosure letter from the manual and I started photocopying pre-foreclosure letters. It was so ghetto, Jeff, that like you could still see the black 3 ring in the letters. And I started stuffing and stamping envelopes, and I sent about 300 and something letters to pre-foreclosures. And fast forward 2.5 to 3 months later, we ended up closing a deal where we made $44,000. And so we closed that deal January of 2006. And I've been doing real estate ever since.
Man, that is super cool. And actually, I realized there's a lot of similarities,
really,
in our stories, kind of overall. Yeah, just in terms of like the family, kind of like where you started, the idea of being the first entrepreneur in the family, and kind of taking a little path down the more traditional route, and quickly realizing you didn't really want to do that. And
now I do.
Yeah, that's really, really cool. And, I love the fact that the black circles were still on the photocopies, because that, to me, the lesson there is so clear, which is that, thinking is great, planning is great, preparing is great, but nothing is like taking action, imperfect action, right?
That's right. And, I would, to add to that point, and I'm glad that you kind of drew that as one of the key takeaways, because I'm hoping people listening and watching this get that as well. I think one of the things that has served me very, very well in my life is I don't really believe too much in procrastination. I know that we have a short amount of time on this earth. And, you ever hear people talk and they're like, wow, I can't believe it's November, December, and like, where has the year gone? Yeah. And I think you don't want to have that mentality, because enough of those and you turn around and a decade is gone. And so I've always been more of a ready, fire, aim type of approach.
Yeah.
And more times than not, that has served me well. There's been a few times where, it's kind of backfired on me, no pun intended. Yeah. But yeah, man. So when I decide and commit, I kind of burn the ships. I put the blinders on and I go all in. And I just, like I said earlier, I bet on myself. And I think that's what I want to encourage people to do, is bet on themselves, because, we're all given unique skill sets and a unique ability, talents. And I think my belief is it's our job, Jeff, to really figure out what those talents are, and then double, triple down on those. Not so much focus on the weaknesses, but really focus on what I believe are the gifts that God has given all of us.
Yeah, for sure. So one thing I've recently discovered about you that you don't know that I know about you, but that we also have in common, and you just got little clues of it in your language just there was, I think we're both disciples of Dan Sullivan, are we not?
Oh yeah, unique
Yeah.
ability. Yeah, Dan. Yeah, man. Dan Sullivan is fantastic. Strategic coach. His book. What is it? Who, not how. I think it is.
Yeah. Yep.
So yeah, man. I've learned quite a few things from Dan throughout the years. I've never gone through his coaching program or anything like that, but just books I've read and things that have really helped me throughout the years.
Yeah. Yeah. He's fantastic. I was in strategic coach for several years and plan to go back and got so much out of that. But even the idea of being ready, fire, aim, I totally resonate with that too. And in strategic coach, they have you take the Colby test. Are you familiar with Colby?
I am.
Yeah. So, okay. What are your codes?
So I'm high follow through. I'm relatively, I think I'm like a 6 or 7 on quick start. I think I'm like an 8 in follow through. Mm-hmm. And so yeah, follow through is my highest.
Yeah. Okay. Quick start is my highest. Follow through is my second highest. But okay. Yeah. No, that's very, very cool.
Yeah.
All right. So if we fast forward to today, as I understand it, you are both an investor and then now very much a teacher and a podcaster and a thought leader. So I want to get into all of that. But like, as you do deals today, what are those deals like? We got a sense for where you started.
Yep. So, I was a one-man show for the first 4 or 5 years of my investing career. I was, when I read Tim Ferriss's The 4-Hour Workweek, and I realized that, hey, I can outsource a lot of stuff so you got to understand, man, the whole ready, fire, aim thing, I learned how to do real estate deals by just doing real estate deals and just screwing up and making a lot of mistakes. But I was never taught to be an entrepreneur. Like, in fact, I've made colossal mistakes from like not filing taxes for several years and then getting an envelope from the IRS, half an inch thick, saying, hey, you owe over $100,000 in back taxes. Like, yikes. I've made all those types of mistakes and I've learned and I've grown from them. So I didn't even realize that, hey, I could hire people to do a lot of the things I was doing in my real estate business. So 2009-10, I hired a virtual assistant, learns everything as far as not to do when hiring someone and how to manage and train them. And then in 2011-12, I specifically remember, it's interesting the things we remember. I was on a date and I had just finished sending out a direct mail campaign and my phone was not stopping. It just kept buzzing and going off throughout the date. And it was a good thing I was getting calls, but it was a bad thing that I didn't have anybody to take those calls. Mm-hmm. And even though I had Pat Live as a backup, like that wasn't good enough for me. And so that was kind of another fork in the road that I said, the wholesaling business is very transactional, obviously. I need to start hiring people, put the right people in the right seats. I read a book called Good to Great by Jim Collins, and he talks about having the right people on the right bus in the right seat. And so 2012-13, I started the process of building a team, so I hired acquisitions managers and dispositions managers, transaction coordinators. And while I've done all types of deals throughout the years, wholesaling was always my bread and butter. And what ended up being our bread and butter was probably also a blessing and a curse. A blessing in that it really provided for my family and it was a tool to generate a lot of cash. But one of the things I didn't realize early on that obviously you and your audience has is that I needed to take that money and put it into assets that create cash flow. And dude, I got stuck, to be just totally transparent and totally vulnerable. I got stuck on that hamster wheel, just making a bunch of money and then living a pretty decent life, but not having anything to really show for it at the end. Yeah. And I rectified that mistake in 2016, 17, when I started to acquire some rental properties. I started doing some lending and things of that nature that started to spit off more cash flow. I launched a podcast called The Flip Empire Show in 2016. And man, I really got a taste, although I had coached people prior to that, I really got a taste of what it was like to give and really help and inspire others. Yeah. And man, once I got hooked on that, like that truly became my passion. Real estate, honestly, is not something I'm passionate about. It's more just a vehicle, but helping people, doing what you and I are doing now, like this is what fires me up, not, trying to find the next deal. Yeah. And so, yeah, man, I'll kind of fast forward to the part that you may or may not know about, but June of this year, after a lot of prayer, thought, careful consideration, I actually decided to exit out of my wholesaling operation, which is something I had been, building up and doing the last 15 years. And I haven't gone anywhere. I'm still doing real estate deals. I just, I had built this machine. I had built this beast that I had to feed, and that no longer fit my vision.
Yeah. Yeah. Wow. That's that's the entrepreneur's journey in a microcosm right there. Right. And I think people, even outside real estate can relate to that entrepreneurial journey of, you get started, you get excited, you start to get some traction, then you start to realize, maybe not everybody experiences this, but I have too, that wait, who's working for who here? I'm serving the business rather than the other way around, and that prompts some very productive but deep reflection, and so it sounds like you've gotten increasingly then like intentional about what you want your life to look like and your allocation of time and energy.
Yeah, I don't think I could have put that any better than you just did. I got very intentional, I think is the operative word. One of the things that I learned early on, and I'll give full credit to the Life Inner organization, was have a vision for your life. Get really clear on what it is you want your life to look like, and then build a business to support and enhance that vision and that lifestyle. And if I'm being honest, man, end of 2017, beginning of 2018, I kind of got sucked into the vortex that social media can be. And, scale is a very popular, sexy word. And I said, man, if they can do it, I can do it. And I set out to scale my wholesaling operation, and I succeeded. But what I failed to realize was that my overhead ballooned from 4 or 5 grand a month to 45,000 a month. I had different types of headache and stress that I didn't have before, and my margins were shrinking. And that wasn't the business that I set out to do. I've always wanted a very simple business that was low overhead, high margin, right? And I had built the opposite. So, and it was kind of tough to unwind that, because to a certain degree, it kind of became a little bit of my identity, and so, but I can't talk about living your vision and then operate a business that didn't fit my vision, right? Like that just wasn't congruent for me.
Yeah. Yeah,
So,
absolutely. Yeah.
Man.
I think, you and I met at an event recently where there were lots of people who were in the kind of coaching industry, but of course they're all investors to begin with and then coaches secondly. And if there was one single word that kind of is like the headline to me of a lot of the takeaway I got from that event was intentionality. Yeah. Because a lot of those people experience that, where they start growing something and then they realize it's not quite right, or they hadn't maybe been intentional enough, and they start to buckle down and get more intentional, and then things start to get much better. Life is happier. They're actually being more successful as well.
Yeah, I think you're spot on. I also got that key takeaway from the event is, there was a gentleman that spoke that, without mentioning his name, he talked about how he and a partner had built a $15 million a year business, and yet I think their profit margin was like 2 or 3%. And he was overworked, and he wasn't fulfilled, and he wasn't happy. And I think people have the misconception that bigger is better. And I've learned throughout the years that that's not true. Better is better. And just because you can get bigger doesn't mean you should. The question is, does that fit your vision? Is that what you truly want? And then why do you want that? Right? Is it to feed an ego thing, or is that what you're really meant to do?
Yeah, absolutely. Yeah. So I call what we do the thoughtful real estate entrepreneur. And sometimes people then ask me, what does thoughtful mean? And I always say there's two legs to thoughtful. The first one is really actually about being deliberate and intentionality, and just, not, thrashing around and taking a lot of action that's not going in a certain direction, to really think about it first and really be, deliberate and thoughtful, I guess. But the other side of it then is an approach to people, and thinking about this being a business that's really about people. It manifests itself in sticks and bricks and dirt and financial structures, but it's really a business about people. And I know that's one thing that we share also in terms of our philosophy. I was wondering if you could just sort of speak to overall, like, what is your kind of, as you coach others and as you did your own deals, like, what is your investment philosophy, and how does that people-oriented side factor in?
I'm glad you asked that question, because again, I know that we share a similar thought process. To me, it's all about people. It's all about relationships. It's all about you. I believe that businesses are meant to serve the owner, but they're also meant to have a positive impact on people's lives, right? And so core values is one of those things that I think is foundational in any business. If you're listening to this and you don't have defined, clear set core values, that's something that I think you really need to spend a lot of time thinking about. And your core values have to be something more than just making money. And when you can make core values about how to positively help or impact other people, and it's not just about you and making more money, that's when I think a business can really breathe life into, into you and into the community. And so, yeah, man, we were talking about this offline. Real estate is just the product. That's all. We're not in the real estate business. Some people say we're in the marketing business. I believe we're in the people business. We're all about working with people, relating to people, communicating with people, impacting people. And if you're, sometimes I talk to people and they say, I'm not happy with the amount of money I'm making. And immediately I ask, what problems are you solving? Yeah. Right? And the bigger the problem you solve, the more money you make. But when you take the focus off of making money and you make the focus about other people, that's when things change. And I don't know if it was Zig Ziglar, Jeff, that talked about, I don't want to screw up the quote, but basically, you'll get everything you want when you help others get what they want.
Yeah. Yeah. It was.
I truly believe we're in the people business.
Yeah. Yep. I absolutely agree. And I think that the question of what problem are you solving is it's a good one, again, in any form of business and entrepreneurship. But I think in real estate investing, in my experience, I should say, that question gets oversimplified by so many people. I think that so much of investing education is, the problem I solve is there are people who are in financial distress with a piece of real estate and they need to just get out. And obviously that happens a lot. But to think that that's the only problem that we solve, I think it's very limiting, and to the point where we almost forget to even ask that question. Like as you were saying that, I was like, okay, well, Jeff, put your money where your mouth is. Like, what problem do you solve? And I would say actually that 8 out of 10 properties I buy, the problem I'm solving is the seller wants to get out of the business. They don't want to pay capital gains right now. They don't want to do a 1031 exchange because that's just, trading one responsibility for another. And they don't like the stock market and things like that. And so the solution I provide in relation to that problem is often some kind of an installment sale structure that helps them defer some gain and continue to have an income. But it is a solution to a problem. And the other thing I guess I just want to put out there for your feedback is I think that so many investors think about the solution before they think about the problem. And the solution is like a hammer. It's like, I like to buy properties at a 40% discount. And so it's like they look at this hammer and go, oh my gosh, this is great. Let me go find some stuff to hit, rather than like looking for the nail that actually needs to be, hit down a little bit. Does that make sense?
1,000%. I'm so glad you said that, because it's like grabbing the hammer and trying to kill a fly with it. Like you might succeed, but there's better tools for that.
Yeah.
So, and I think that's what, in the wholesaling industry, so many people teach. Everybody buys with cash and closes on your timeline, and there's no closing cost. But like, can you provide the seller with other options that maybe they don't need to sell cash and they don't need to sell at 60 or 65 cents on the dollar or less? Maybe there's, and I love the fact that you're crystal clear on who your avatar is and what their challenges are, because now you can craft your marketing message, you can craft your product, your solution to best serve them. And many people don't have that clarity about who they're really serving, right?
Yeah, absolutely. It's really just another version of intentionality, right? When like here's the person I know I'm most probably best suited to help. Brings a lot of focus. So, okay, so that's really cool. So now a couple weeks ago, you did something really fun. You did kind of a video element to your to the podcast where you had this multifamily versus single family. I'm going to call it smackdown, a debate. That was the nice way to put it, debate. But it was fun and entertaining to watch and educational as well. But I was curious, like, what was one thing that you took away from that? Like when you hit the end button, you're like, oh, the most interesting thing about that was blank. What was that?
Great. First of all, great question. I wish I had a super sexy answer for you that was like something that was like, wow, that was a huge aha. But I think what it did was it just validated that real estate is a phenomenal industry. It's a great space to generate and create wealth and to generate cash flow. And I think this is going to sound like you teed it up for me, which you didn't, because I had no idea you were going to ask this, but I think it ties in perfectly to intentionality and being very purposeful. And look, you can succeed in either asset class. You can succeed in single family, multifamily. In fact, I'm doing one in a couple of weeks, storage versus mobile home parks. Any of these real estate works. The question is, do you work, and are you going to be laser focused, right? So you have to pick the one that's best for you. I think the mistake is trying to like do single family and multi and do all these different asset classes, especially when you're just getting started, if you haven't built something that already has gained traction and momentum. So to answer your question specifically, it just validated that, man, real estate is a phenomenal space. It's a great industry. And if you're in real estate and you're very intentional and you're focused in and dialed in an asset class, you're going to succeed. Now, granted, you have to have the right strategy. And there's other things that come into play. I don't want to say just because you're in real estate, you're going to succeed, because that's just false, right? But dude, Rob Swanson and Dave Perichin on the single family side, they presented a lot of pros for the single family space. And then Tim Bratz and Rod Cleef definitely presented a lot of pros on the multifamily side. I think the general consensus was multifamily won, quote unquote, not so much because that the guys took it to Rob and Dave, but more so because, there's more scalability and just multifamily has things that, but that doesn't mean that everybody listening here should go jump and run into multifamily, because they might not be best suited for multifamily based on their skill set, based on their goals, etc. So both asset classes, all four guys won, in my opinion.
Yeah. I agree. I guess I left there feeling like the right asset class is the one that you fall in love with, the one that you want to become, you're driven to become a student of, the one that you find yourself just dying to, keep studying it and learning the tips and the tools of the trade, and that, like, kind of where your passion and your heart goes, then your expertise and your competency will go too. And then, it's in that sense, like, I don't think you go wrong picking one or the other. I guess you could make tactical mistakes within deals and things like that. But
yeah. And it's really interesting that you just said that, because I find myself now reinvigorated, passionate, excited. And I have, as of the last, and this is very, very recent, as of the last 2.5 weeks, I have been consuming so much content on storage investing. In fact, so much so that I hired a coach and joined the storage mastermind. And so now that I have the mental bandwidth and the time and energy, and I've kind of taken some time away from the single family space, that is the asset class that best fits my vision and what I'm looking to accomplish long term. So as you were saying that, I could just kind of, like, it was resonating with me.
Yeah, absolutely. I've got a good friend who's been very successful in storage as well. But then we also had Stacy Rossetti on the show a couple of months ago as well. It was really cool to learn more about that space.
Yeah.
I think the other question too is, once you know really what your unique ability is, the question becomes, like, in what arena are you able to show up as your best self? And so when I think about, like, what is my specialty, I do single family and I do small multifamily. I don't have any, 100 unit complexes or anything like that. But to me, the commonality there, the common denominator, is not necessarily the number of units, but it's actually more about the negotiating dynamic. And that's, I'd say, like, my sort of quote asset class is the asset class where I can sit down in that seller's living room as a regular person, eyeball to eyeball, have a regular conversation and see if we can work something out. And that, if that's an 8-plex, that's an 8-plex. If it's a house, it's a house. And so I think that's kind of that other question is, like, where do your unique abilities show up in the best light?
Yeah. No, I think it's a phenomenal point. And I think it's one that when people really hone in and figure out what their unique ability is, I think people will start to realize that you can get involved in real estate and not necessarily, if your unique ability is not to be an operator and not to be the CEO, but you're better served as number 3 of somebody else's LLC. Gary Vaynerchuk talks about sometimes people are much better suited being number 17 at Facebook than trying to be Mark Zuckerberg, right? Because not everybody has that gift. You realize that there's many creative ways to get involved in real estate and to be a part of a successful business. There's joint venture opportunities. So, like, if you're really good at negotiating, figure out how you can do more of that. Number 1, you're going to be more successful. Number 2, you're probably going to be happier. And number 3, I think you can have a greater impact, not just in the amount of money you make, but the people that you work with, by focusing in on that aspect of it and trying to either outsource, delegate, or figure out how you can get the other stuff that's important, but that doesn't fit your skill set and your unique ability. So I think you bring up a really good point about kind of playing in the sandbox within the talents and gifts that have been given to you.
Yeah, absolutely. So with your podcast and coaching stuff you do, and you've got a great reach. And so when I think about reach, I think that's a lot of data points that you get to observe from investors, all over the country doing all sorts of different things. And we know 2020 has been a real one of a kind, year. Like nothing else has been like this. So I'm wondering, as you get to, you get visibility into so many different people. What's the thing, like, if you could kind of like name one thing that you see people doing in 2020 that like, I feel like that's a little bit of a mistake. I wish people would be making this adjustment in 2020.
Yeah, that's a really good question. And I'm just kind of processing here in real time. I'll tell you one thing I've seen a lot of people do this year is make decisions similar to what I made, not necessarily the same decision, but understanding that 2020 has kind of flipped many people's lives upside down, and for many people, it's their income has been shut off or has been severely altered, and I think I've seen a lot of people kind of open their eyes to the fact that, like, I can't necessarily have all my eggs in this basket, and if this basket gets affected, how is this going to impact the rest of my life? And so I'm seeing people kind of take a step back and ask the question, hey, what do I really want for my life? Is this the best business to be operating in? It happens to be, for me, it was just timing. My decision had nothing to do with COVID. In fact, I was having conversations with people in my mastermind, my coach, going back to 2019. But so I've seen people kind of take a step back and ask wider, more broad questions about what they want out of their business and out of their life. I see people getting involved in risky rehab deals that I kind of wish they wouldn't, with the uncertainty of the marketplace. I see people swinging for the fences, expecting properties here, at least here in South Florida, have been super hot. Interest rates are still really low. And I see people getting involved in deals that I could potentially see them getting caught holding the bag. And so, unfortunately, I see people making mistakes that I saw people making in 2007 and 8. And even though I happen to think there's some sort of market correction coming, I don't know when, I don't have a crystal ball, but I do believe that at some point here coming up, we're going to see some sort of correction. Now, to what degree, I guess that's debatable, right? But a lot of the mistakes that people made back then, I see them making now, not monitoring days on market, not monitoring inventory levels, just assuming that things are going to continue to stay hot. And it's ironic because we're in the middle of a pandemic, right? So those are some of the things that come to mind for me.
Yeah. Yep. I understand. I agree too. I actually just closed on the sale of a flip yesterday, and the whole time it was an escrow, which isn't 5 weeks or something. It wasn't a real long time, but the whole time, like I actually feel like it's my job in that case to continue to be. I hate to use the word worried, but like aware of the fact that a lot of things could go wrong. The lending market could change if there's a sudden spike in COVID cases that could result in some kind of very quick, swift governmental response, which could then impact the secondary market. Like there's just so many things that are variables, and obviously we can't just sit around like living our lives in fear and paralyzed and stuff. But yeah, that whole escrow period, I just was keenly aware that like at any let's get this thing closed, because for all I know, the day after we close, like I don't know, there could be some Fannie Freddie policy change that could just change everything. So I agree. It's definitely time to, just step cautiously and just be aware that, we can't take anything for granted as an assumption that like, oh, the buyer's pre-approved, that means they're going to close. Or
I completely agree. And to piggyback on just some things that came to mind as you were speaking, Jeff, was, if don't delay getting a deal closed, right? Like don't just assume it's going to get to the closing table. I think over communicating is extremely important. Sometimes I see investors make the mistake of we ink the deal up and we kick it over to the title company and just let us know when the closing date is and not communicate with all parties involved. I think that's a big mistake that people make. And going back to our conversation about relationships is continuing, have a long-term view in this business. Don't have a short-term view of just transaction after transaction, but make sure that you're building relationships, right? With people, private lenders. I know many people that are just banking on lines of credit. And one of the first things that gets shut off when things go sideways is lines of credits get shut off. And then then they start to try to build relationships with private lenders, but it's too late. So start planting those seeds, start investing into relationships. And the biggest thing I would share with you guys about investing in relationships is always approach relationships with a servant's mentality of how can I help? How can I add value? Don't approach relationships, especially with people you don't know or that might not know you, with your hand out asking for something. I mean, I think I can't tell you, and I'm sure you get people that reach out to you, and you don't know them, and yet they're asking you for something. And sometimes you might accommodate them, but that's just not the way to build a true relationship, in my opinion.
Yeah, I agree. I do. I get some of those directly to me, but even more broadly, be in a Facebook group or something, I'll see somebody post, "Hey, I'm looking for a mentor in so-and-so town." It's like, okay, good luck with that. I mean, where's the exchange of value gonna happen here?
Right. Yep. We agree.
So, all right, I want to talk about Flip Empire. And if I'm tracking correctly, like you've got darn near 500 episodes under your belt with that. Is that right?
Yeah, we're approaching 500 here pretty soon. So the story behind the Flip Empire show was, I guess I was fortunate that I experienced some level of success here locally. And from time to time, I would have people approach me and just ask me questions. I certainly never, claim to know it all, and I still don't. I'm still making mistakes, right? But I've always been very open and very transparent and vulnerable, not just the wins, but the losses, because we all have them. And I would have conversations with people, and then more people were kind of approaching me. And I would end these conversations, Jeff, by thinking to myself, I wish that conversation was recorded because I believe it could help other people.
Yeah.
And then early 2016, I kind of made the decision. I'm like, you know what, screw it. I'm going to launch a podcast. And I'm not super techie. I know enough to be dangerous, but like I equated like how I knew nothing about podcasting. I just kind of knew what it was. And dude, 30, 45 days later, I had a podcast on, at the time it was iTunes. And I told myself, if I'm going to do this, I'm going to do it right. And I'm going to be consistent. I had read a stat somewhere that, 80, 90% of podcasts like don't get past the 6th or the 7th episode. And I said, I'm going to commit to this. I'm going to do it. And so every single week since June of 2016, I've released 2 episodes. And I cannot tell you, just the platform has been incredible, how many doors and opportunities it's opened up. I'm sure you've experienced a lot of that as well. Just the fact that you and I, even though we met at an event, like this is a continuation of our relationship. And now I get to hopefully have a positive impact on your audience. When you're on my show, you can have an impact on them. It's just opened up a lot of doors and opportunities. And I knew something was missing in my wholesaling operation when I would get more genuine joy, fulfillment, and appreciation from somebody reaching out to me from the podcast saying, hey, man, I really appreciate you putting out this episode. It really helped. I got more joy out of that than closing the next $20,000 deal.
Yeah.
So... yeah, man.
That says a lot. And, when I did first meet you, you mentioned I do 2 shows a week, and then just earlier in this conversation, I was doing the math. I'm like, okay, early 2016, it's late 2020. It's almost 5 years, 500 episodes. Like that's literally 2 episodes a week with unbelievable consistency. I guess I just wanted to key in on that idea of consistency, because a lot of times, entrepreneurs, we're high, quick start. We a lot of ideas and we take action quickly on those, but the follow through is not as high as yours. And you mentioned your follow through score is high, which is reflected, in the number of episodes and that consistency. But if you could, give people a tip on how to be more consistent in life, because I would argue that quality is going to lead to better and more deals, bigger deals, as like pretty much any positive outcome you're seeking in life. And I can't say I've been perfectly consistent in everything. It's something I'm always striving for. So do you have any words of wisdom for us?
Again, I think it's a really good question. I think about the analogy of the magnifying glass, where you put a magnifying glass to a leaf and you leave it on a hot summer day. And I see too many people grabbing the magnifying glass, getting frustrated with the lack of results, right? It's not burning a hole through that leaf. And so they think it's the leaf and they go move the magnifying glass and pick up another leaf. And it's not the leaf. It's that you just need to leave it there long enough so that it actually burns a hole through the leaf. So when it comes to consistency, think about that analogy. Hopefully that helps. I realized many, many years ago that I had to go an inch wide and a mile deep in order to have an impact. And in order for something to really blossom and to really come to fruition, I knew that, doing 50 episodes in a podcast and doing it whenever I felt like it wasn't going to gain any traction. It wasn't going to really go anywhere. It's almost the equivalent of like sending out, 200 or 300 mailers and then not doing it again for another year, another 3 or 4 months. Like, be consistent if you really want to have an impact and if you really want results. Think about another analogy, going to the gym. You can't just go to the gym for a week straight and expect to have like this desired, let's just say, a beach body type of look and physique and a six pack, or you can't just eat well or clean for 3-4 days and expect to lose all this body fat and all this weight. Dude, you got to be consistent. And I certainly do not want to make it seem like I'm consistent in every aspect of my life, because like you and like many others, sometimes I fall off the wagon, but just not beating yourself up about it and just getting right back on. And I like to think big picture, Jeff. I like to think, okay, why am I doing something? Right? The why is key. So we talk about Dan Sullivan, the book, Who Not How. I think just as important of asking who is asking why you're doing something. And if you have a strong enough why, that's going to help you remain consistent. Too many people talk about it, but they're not willing to be about it. And so all these strategies or asset classes or podcasting or YouTubing, all these things work. The question is, do you work? And are you willing to put the time and the hours and the sacrifices to really make it work, right?
Yeah, absolutely. Wow. Well said. Thank you for that. Well, so as we get closer to wrapping up, I wanted to see if you would tell us a little bit about, I know you're involved with something called Ascend. Mm-hmm. And can you tell us, like, how does that, like, what exactly is it and how does it fit into the world of things that the Alex world and everything you do?
Yeah, I appreciate the opportunity. And I think to kind of share in a nutshell what Ascend is, I think it'd be important to give you a little bit of context. Beginning of 2019, Jeff, I was in Guatemala. I was there for, it's called a master mission. It's half mastermind, half mission trip. And during that mastermind portion, first of all, the mission trip was impactful, and it's left a tattoo on my heart and in my head, and just incredible experience to serve at that level. But the mastermind portion, man, things were going well. We were making money. We were closing deals from the outside looking in, but everything looked great. But inside, something felt off, right? And I opened up about the fact that, hey, I feel like I'm being called to do something bigger with my life and bigger with my business. Well, fast forward 4 or 5 months from that point, Ascend was born, where I approached a friend of mine, Steve Kavanaugh, who had a very successful coaching business in Maryland. And we felt that combining our efforts, 1 + 1 could equal 5. And so we set out to create and launch a community where it was mastermind coupled with the benefits and the power of one-on-one coaching, right? Because I've gotten so much from masterminding and coaching, but I always had to search outside of the mastermind for a coach. And I always had to search for a mastermind outside of the coach, right? So we wanted to, going back to the whole avatar thing, we got very clear on who we wanted to work with. We wanted to work with existing entrepreneurs that already had a business, but the business was running them, right? They didn't have the desired lifestyle. They didn't have a vision for their life. We wanted to work with people that desired to have a positive impact on other people's life, right? We wanted to see how can we have a ripple effect on as many people as possible by working with people that also had that mentality. And so we launched the community where we meet 3 times a year in person. It's a challenge-based mastermind. It's life and business focused, so it's not one or the other. Sometimes in our retreats, somebody's having a personal challenge. It could be relational, or it could be, I'm going through a divorce, or I have this addiction. And then it could also be on the flip side, somebody else has a challenge in growing and scaling their business, or hiring, or doing more deals, or, growing the bottom line. So it's a very holistic approach, and it's very, it's a family type atmosphere, brothers and sisters walking alongside each other. And then there's a one-on-one coaching component and other things. But yeah, man, it's, I would do that for free.
Yeah.
Like, that's my happy zone. That's where what I feel like I'm meant to do is co-lead that group along with the podcast and a few other things I'm doing. So I don't know if that answers your question, but it's for entrepreneurs. It's not just for real estate investors.
Yeah.
And it's for people that want more out of their life and their business.
Yeah. I love that. And I feel like the storyline that I've heard from you is, you started doing deals, and then, you transcended to that, or from that to building a machine that does deals. And then you transcended from that to wanting to help other real estate investors. And then you transcended from that to, I want to help other entrepreneurs as well. And so I see it like literally in my mind as you're kind of getting to a higher level, a broader perspective over time. And I love that journey, and I relate to it a bit myself too.
Yeah, that's so cool, Jeff. I don't know that I've ever heard it kind of outlined the way you just did, but yeah, that's exactly what it's been. And it's interesting that you said that, because you get to a certain place where money's important, but it becomes bigger than money, and it speaks to now a bigger purpose. And when you find that purpose, like, I think that's where the juice in life is.
Yeah, fantastic. Well, I'm sure people are going to want to know how to follow up with you and find everything that you've got going on. So what's some of the best ways to reach you and hear more of your ideas and content and offerings?
Yeah. Again, appreciate you having me on the show, man. This has been a lot of fun. A couple different ways. Ascend, you can go to ascendyoursuccess.com, ascendyoursuccess.com. And then the Flip Empire show, flipempire.com. And then if you just put the /podcast, that'll redirect you to Apple Podcasts, and you can check out the show. And again, I open up. I reveal all on that show. It's not just business. There's some personal stuff in there as well. But I share wins, losses, what I'm working on. I'm kind of opening up about my storage journey now on the show. So it's been cool. So if you guys have any interest in that, go check it out.
So cool. All right. Thank you so much for being here, Alex. I really appreciate it.
No, Jeff, really appreciate you, man. Anything I can do for you, just let me know. And I look forward to continuing to build the relationship.
Me too. All right. Awesome. Well, I hope you enjoyed that interview. I sure enjoyed the conversation with Alex. And he's not only just a great guy, he's been doing his podcast for a long time, as he described there. And he has talked to lots and lots and lots of great guests. And so talk to one person in Alex who's got a perspective that reflects hundreds of people that he's interviewed over the years. And he's just a wealth of knowledge. Be sure to go check out and subscribe to the Flip Empire show. Absolutely. Well, that's it for another episode of Racking Up Rentals. Show notes for today's episode are at thoughtfulre.com/E59 for episode 59. Please do us a big favor. Hit that subscribe button in the podcast app. If you would be so kind as to just take 5-10 more seconds and rate and review the show, we would so appreciate that. Did you know also that we have a group in Facebook for thoughtful real estate entrepreneurs? We do. It's called Rental Portfolio Wealth Builders, and we would love to have you join us there. Just go to group.thoughtfulre.com, and the magic of the internet will take you right to that page where you can hit the join button. And if you enjoyed this episode, I hope you did, please take a screenshot of it, post that screenshot to Instagram, and just tag us. We are at Thoughtful Real Estate. All right, friends, until next time, I will see you then. And this is Jeff from the Thoughtful Real Estate Entrepreneur signing off.
Thanks for listening to Racking Up Rentals, where we build long-term wealth by being win-win deal makers. Remember, solve the person to unlock the deal and solve the financing to unlock the profits.